The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. A beautiful December 10th down here at the headquarters of technical trading and investing in Tampa. But I digress. Beautiful, sunshiny day. Hard to think that there's a trouble in the world out here, but there's a little bit of trouble, and it starts right here in River City, and it starts with S and ends with P and has an and in between it. It's the S&P 500, folks, off 23.71 points. Last tick I show is at 2035.76. Volume is not exciting. It's good, but not exciting. 2.3 billion shares on the New York Consolidated Tape as we start the show. And as always, you can take a look at what we do here every day. But most of it is trying to figure out what this crazy market's going to do. I didn't see much in the way of action yesterday other than adding a single position. I don't see a lot of trend in any of this market. And one of the reasons why I didn't and haven't gone with a index position in any of my newsletters, I think we probably are set up for a fairly benign movement into the end of the year. I think we could go up to 2070, 2080, 2090, something like that, maybe into next week. Right now we're setting up, though, for pretty much a expiration that is compliant with what options are telling us. Let's take a quick look at the SPYs, because I don't bring that up again. 204.04. And I just don't see a lot going on. If you're watching on Tiger TV or in the Den, I will show a chart of what we had last night. I suspect we're going to get a little bit more movement. Probably about 80% of options going delta neutral happened yesterday. I think we've got about the last 20% going today. So this is what this chart looked like last night once I got the data. And again, it's about 6:30 before I get the filtered, cleaned up data, not the nasty data available all day long with bad ticks and wrong numbers and stuff like that in it. So at the finally end of the day, I'm always using yesterday's numbers for the options. But boy, it sure shows a pretty much 205 as a perfect example of where we should expire a week from Friday. And unless something drastically changes, I don't think we've got much in the way to expect that wouldn't be probably a little up from that. I think that there's enough short positions out here going into the end of the year. That's why I think maybe 207, 208, maybe 209 by the end of the year, probably 207, 207.50, something like that for expiration next Friday. Now, you can always get the black swan event. But as far as I can tell right now, there is no black swan coming up in the next few days. They've thrown everything they can at this market, and there just isn't much to go. So I am playing pretty much individual positions. I added one yesterday, and let's take a look at that. It's up 4.5% today, so pretty happy with that. And we also had an existing position. It's off 0.5%, but it's still holding in fairly well. So we'll have to see. I've got expiration options on one, and that gives me about 7 more days for these things to pay off. So we will keep an eye on it. But anyway, I just thought I'd pass that on for those folks that are interested in at least the short-term prediction of where this market's going. I could see a lot of people getting all hot and bothered about the action yesterday, thinking it was one more time to go up. Now what they'll be doing is telling everybody how this is the end of the world today. They'll say, well, we had a reversal yesterday, we had a failure on the reversal today, And to me, this is a lot of noise. A lot of that noise has to do with options expiration. And I still think that, we've got a market that's probably pretty tied up till the end of the year. I don't see anybody retiring on the money that they make in index futures or options before the end of the year. And again, pretty much contemplating and working on a theory throughout and into a week from Friday. And that is that the only thing you're going to make any money on are stocks with high short interest. They get a squeeze between now and then. And went through a bunch of them, put them in my daily newsletter this morning. I also saw one other good opportunity to add something to my long-term Tech Insider newsletter, and went out with April options today on that. So when I thought that I might have a problem with getting anything, it's actually there are a few things showing up. Normally I would probably be out walking the dogs most of the day and ignoring stuff, but there are a few kind of acorns that are falling my way, and we are playing with those, or playing those. Anyway, it is a beautiful December day out here. Could be just a tad warmer, but I digress. On this day in 1984, Sandy Lerner and Leonard Bosack, two professors in different academic departments at Stanford, are frustrated by their difficulty in communicating by computer. They found Cisco systems to make improved network switching equipment, and boy, did that thing become a monster and the de facto equipment and a monster. And nothing can probably beat the 2000 highs with Cisco with a share of stock, more than a share of stock for every man, woman, and child alive on the planet. And it still amazes me that the thing can move with 5 billion shares outstanding, or 6. I think they've been buying some back, so maybe they don't have 5 billion shares or 6 billion shares anymore. Of course, people have accelerated it a lot faster than Cisco did after all those years. But what can you say? Apparently, there is a deal on the budget, so we'll at least not have any shutdowns until January. I suspect we will have some back in then. Democrats agreed to make some of the biggest changes yet to the 2010 Dodd-Frank Act sought by Republicans. Basically, this would mean that derivatives can make their way back into Federal Deposit Insurance Corporation, the umbrella again. And, of course, ever since it was enacted, the banks have been pushing to reverse this change, but it looks like this is back in the deal. So a little hair of the dog that bit us. But it looks like we're right back to insuring a lot of things that probably shouldn't be insured. And I am not happy with the Republicans on this deal. But basically everybody's picked a side now. And if you hate the big financials, on the opposite side, the financials are probably more than willing to throw cash at you to get their way on the opposite side. And to the victors go the spoils, or as the president said, elections have consequences, and this is one of the first of those out of this budget deal. It hasn't passed yet, but apparently it's, I don't know, everybody's saying it's a fait accompli, but it's hard to tell. Anyway, budget deal. I've been watching this fairly closely because I wanted to see what was happening. Someone asked me why I bought something yesterday. I said, well, I have a feeling it's because these EPA regulations, they're going to be 500, 800. There's some kind of ridiculous load of EPA stuff that probably is going to be looking to see whether a bird has flatulence in the woods, and that's going to mean that I can't buy a gallon of gas or something. These guys lately have just kind of been nuts. Anyway, one of the first problems, or at least the first reactions to the change in the Senate is going to be that the EPA is getting $60 million less than last fiscal year. So while they may have some new regulations, they may have problems actually pushing those and pushing enforcement of that. My guess is that a lot of those will probably, I don't know whatever happened to us. When did a bunch of bureaucrats be able to make laws? I mean, I thought it was politicians that had to make laws that were signed by the president, not just a bunch of nitwits. And you just got to say that most of these people are just nuts, making all kinds of stuff. You don't go to work for the EPA because you want to help people pollute the planet. You go there because you want them not to. But, of course, you get a bunch of people in a room and they can come up with some crazy ideas when they keep talking to each other, and the echo effect. And pretty soon they're ready to topple the government because some cows had flatulence out there in the field. Anyway, the EPA will have to reduce its staffing to the lowest level since 1989. So it gives you a pretty good idea of what's going to come out. A lot more regulations and fewer people to actually put them in line. The other part of it that I thought was interesting, especially since I follow Cree and was short it back up at 65 in the Tech Insider for a variety of reasons that we published. But they keep fighting about this, and one day I have a feeling it's actually going to go through. And on that, you may want to actually go long, Cree. Didn't do anything for it earlier in the day. But the bill, once again, prohibits new standards that would ban the use of incandescent bulbs. So you can still buy them. But, you know, to tell you the truth, the funny thing is that why politicians have messed around with this proposal for a long time, you can now buy a $4 LED bulb that's going to last 15, 20 years. It's also going to use about 25 cents of electricity for the entire year compared to probably $5 for your incandescent bulb. So I just don't understand it. Why spend the time changing bulbs? And also, why bother? Because the thing is going to pay for itself 5 or 6 times now. I can understand it when bulbs didn't last, LED bulbs didn't last that long, and because they tend to wear out fairly quickly. Basically, after a number of years, they'll only put out half the power they did. But now that it lasts 20 years, it's going to put out probably 50% of the power for the first, 90% of the power for the first 7, 8, 10 years, and still be a huge deal. So I'm saying, if you want to make a good investment, LED bulbs are probably not a bad idea. I'm not a big fan of the CFLs. They don't last long. They're made in China. If you get one here made in the United States, they can last a while. But I think it was Consumer Reports showed that they last about 25% of the time that they say that they're supposed to. So I'm not a big fan of CFLs, although they've gotten much cheaper. Yeah, that's pretty much what I'm thinking for the EPA deal, and that is there are a lot of those new 500 or 800 restrictions that we haven't seen yet are probably all around coal-fired power plants. So we'll have to take a look at that too. But those are not probably going to come around until middle between 3 years. Anyway, back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Had a question in the den. I'll go ahead and answer it on the air also, and that is basically, are you really buying digital files anymore for movies? And the answer for the most part is no. There was a kind of a deal where you could save it on your computer for a while, but that's pretty much gone out the window. Now you see a lot of these services that'll say you can buy and own this movie forever. It'll reside on our server, and you don't have to worry about losing a CD. But what they always do is keep it encrypted on their server, and every few minutes the code changes to actually play that digital file. And basically the whole idea is so that somebody on the other end can't just decode the other side of the conversation, basically turn on a recorder, which, you know, if you have something like YouTube, I can basically download any of the YouTube videos and save them as an MP4 file on my hard drive and play them back at my heart's content. But what most of these movie services do, like Netflix or the rest of them now, pretty much forced by the content owners to do, is make sure to make it incredibly difficult to do that. And they'll send it as a series of different files, so any system that tries to record that stream, you know, now you have 40 streams, and you have to put them back together, and the code changes for each stream, and it just becomes a real nightmare. It's not easy to do, not like YouTube, where you can just click on the downloaders and actually download the entire video. There's a site even that will, if you go to YouTube, will allow you to strip the audio off of it and save it and download it. So there are a lot of things you can do on something like YouTube that you cannot do on something like Netflix or Amazon Prime. In fact, Amazon Prime I just got yesterday, or the day before. Got on Monday. Wanted to get their free service for 30 days because I'm going to be buying a lot of presents, and it seemed like the smart thing to do just to go on the 30 days free trial and get all that free shipping, 2-day shipping and stuff for Christmas, and then I'll decide whether I want to sell it. Now, one of the problems, or one of the things was they were supposed to have all these great movies, but they have such severe and ridiculous restrictions on how you can play them that I can't stream it to my Google Chromecast-enabled TV because, of course, they don't like Chromecast. They want you to buy their Fire Stick, and it won't even play on this computer that I have. I have to use yet another computer to play the videos back because all they want to do is use Silverlight, and Silverlight doesn't like some of the things I've done on this computer to develop software, so it thinks it's a threat to me maybe recording those things. So a lot of stuff going on in that, but it's mostly about digital rights management, DRM. You'll see that signal there for a while. So it is problematic. I can't really see that there's a whole lot on Amazon Prime that isn't on Netflix. Netflix seems to work fairly well. And I certainly like the fact that it works with my Chromecast dongle that I bought for $25. And they want me to buy yet another device to shove into my TV so I can watch their products. I don't need their Fire Stick. I know what Amazon's all about, and that is trying to make sure that you can't go outside their ecosystem. I have one of their fine Kindles. Maybe I'll go get it during the break and show it to you. But I've changed it, ripped off their I didn't rip off their software. I took their software off the device and put it in a third-party version of Android to run on it, so I'm not stuck with all their horrible Kindle stuff. I can download Kindle apps if I want to, but for the most part, all I do is download free Amazon app, or not Amazon, free Android apps off the Android store. So I'm not stuck in their ecosystem and only can run what they want. But I do get the ecosystem of Amazon too. So it is kind of neat. But everybody's trying to force you into a box. Google just wants to be there and see what you do. And a lot of people are saying they don't like that because you're the product. But to the most extent, I don't care. I delete all my cookies after every time I close my browser, so they're not there very long. Anyway, other things in the budget deal out here. Oh, wait, how do we have time? If you like your mail on Saturdays, you'll keep your mail on Saturdays, unlike your doctor. The bill requires the mail service to continue 6-day deliveries despite year-long attempts to cut back on service to save money. This will probably fall this next year, and I would assume that you're probably going to see UPS and FedEx, but I think this is the last year that we'll see Saturday delivery for mail, and that probably put a little flame under both UPS and FedEx going on through next year. That's kind of the highlights of the budget. I don't see a lot that should move the markets out here. When we come back, we'll talk about some new stuff. I think that's all from yesterday. And we'll talk about some new stuff and some charts. We'll go to Yum when we get back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And if you're watching on Tiger TV, you'll see Cryogen Mod booting on my Kindle Fire here. And so I've taken the operating system that came with the Kindle Fire and gotten rid of it and put on my own public domain Cryogen Mod operating system on it, which is basically a very vanilla version of Android, but 2 versions later than it's available from Amazon. And also, you can look through all the code if you want. Cryogen Mod is going to be a public company probably in the next year. They are really trying to go public over in Asia, and we'll see how far that they go. But it's a bunch of people getting together, taking the Android code that's given away and made public domain, and modding it to the different devices. And by that, you're not stuck. I've got that also on my Samsung Galaxy 3. See if we can see it here. Oh, actually, it's a slightly different version, made by same kind of thing though, made by somebody else. And this has got liquid. What is it? Liquid something or other. I'll reboot this thing, and you can see it. Reboot. Here we go. Reboot. I'll show it to you in a second. In the meantime, we're going to look at Yum Brands. Yep, So anyway, here's why I'm looking at, oh, here it is. Liquid. Hopefully you can see it at home. I'll try to tilt it down a little bit. It'll blink like that. Liquid Smooth is the name of it. There's so many different ROMs you can get for these different phones and different things like Kindle Fires and stuff, and you can replace them if you know what you're doing. It's not for the weak of heart. It took me a little while to figure it out, but it was well worth it to be able to do anything I want, gain root access to the operating system, write my own programs, which I have on both those devices. A lot of those things alert me for different conditions in the market. So just interesting. Yeah. Okay, can you show me? Okay, I thought I showed it to you in the gen. Yeah, already. But I'll put the links in there during the next break. Anyway, Yum Brands, of course, basically saying things are horrible in China, and they expect them to get much better, but nobody's believing it anymore. That's probably about the fourth time that I think Yum Brands has said that. And we're down kind of at the lows already. Of course, the market's been weak, off 29 points right now, 30 and 46 cents on the S&P cash, 2.58 billion shares. So again, we're seeing a little bit of weakness out here in the market. Let me look at just a few other things going on. Yeah, my new position from yesterday is only up 4%. So at least I'm on the right side of that trade. See if there's anything else going on out here. Apple off 2 points. Anyway, we'll look at the rest of these stocks I have on my list because there is a bunch of stuff going on out here. Anyway, Yum had a warning. It is kind of interesting. Alcoa. Let's see if this thing had any move. They basically came out with a new way of making aluminum, and instead of taking about 2 weeks to make a part in aluminum for auto manufacturers, they're calling this thing the micro mill. And I thought it was interesting. I wanted to see how it reacted to the news. I think market probably a lot more has to do with the market than anything else. And of course, is gas prices are going to remain low. Aluminum's going to be a hard sell for the higher price. But anyway, this micro mill making parts for cars, I'm pretty sure that most of this is come out of working with Ford in their new F-150. But not a whole lot of movement out there. But if you Google micro mill, you'll see what Alcoa is talking about. But basically, making car parts in 20 minutes that used to take 2 weeks. And most of that has to do with whether or not you can just buy molten or ingots of aluminum and not have to buy existing preformed aluminum panels to go and then start making things like door panels or frames out of it. You'll be able to make them yourself if you are a manufacturer. But I thought that was kind of interesting. As far as the big losers out here today, of course, energy is CVX. Energy is part of the thing. We're blowing out these lows, but the volume not here quite yet. I mean, we've had some decent volume. What I wanted to see, of course, was the October 15th low, 106.65 with 15 million shares. Yesterday, we had 11 million shares. Today, we've got about 9.9 million shares, so figure 12 million. But we are going to be breaking through that October 15th low on lighter volume. So I think we could get a nice little bounce in some of these stocks fairly soon. Another one in that same vein is XOM. Yeah. Actually, transparent aluminum is a real thing. Somebody in the den's chiming in. And as always, I forgot to, you can email me at path@tfnn.com and or give me a phone call at 877-927-6648. Anyway, Exxon, another one down. This one's going into a low from 86.91 from the October 15th low also. 24 million shares. We got 13 million today. So you can probably say, what do we got here? 88. So we got about $1.30, $1.40, something like that to come out and test the absolute peak low of that October 15th low. So we're looking at that. What else do we have? Of course, everything looking pretty horrible in the Boeing company, down a fairly decent volume today, 3.7 million shares compared to 3 million shares yesterday. So we're getting a little bit of acceleration. I still don't like being short Boeing. There's so many other companies that have so many bad things going for them. Boeing is not one of them. Cheap prices on fuel for the foreseeable future. It's hard for me to see that this is going to be one that blows up. I think that you could see much longer weakness in some of those energy stocks than you could see in Boeing, but it is down. Volume is starting to pick up, but probably in a range. You did have a break of the August 6th low that had 6.2 million shares at 117.87, blow through it, and, of course, get to 116.32 on October 15th. So a higher volume test of the low pretty much means you're going to get another test of that 117, 116 area. Of course, since it's higher volume and a lower price, you want it to go to 116.32 on lighter volume. And 7.8 million shares, probably not a bad buy, maybe around 115. If it dips down there intraday or something like that, closes back up, maybe you could buy it for the day, and if it closed back up above 116.32, keep it if you want to try to get the best price, or for a more profitable or probable profit, let me put it that way, wait until it closes back above 116.32. It's hard for me to see, even with the market pulling back, that you'd want to be short Boeing. They are just... It's kind of like shorting just the strongest horse in the field. Don't you want to short the weakest? And weakest doesn't mean that the price is not high. It only means that there wasn't a lot of enthusiasm in the last leg up in that stock. So you can take a like on that. I have a question. I guess one on here is on Apple. Whether or not it's a valid ABC up, and my answer is no, and that is because all of the volume above $103 has not come in to the volume of that 103.78 high at 68 million shares. You wanted to see some sign of strength, and you've never gotten it, and that is the classic sign of a breakout without volume. And does it still hang up here through Christmas? I think so. And does it make it probably through maybe the Super Bowl? I think it could, or at least hold up. I suspect that what we're really looking at is a late first quarter and second quarter huge pullback. I just don't see anybody that likes the iWatch that much in technology. They think it's an interesting idea. They just don't think that more than 1 out of 10 people are going to buy it. And it certainly was not going to have anywhere close to the kind of margins that the iPhone has. And that's really what it is out there. If you made something that you basically are making 65 or 70% margins on, mostly because the people are giving you a huge amount of cash back to sell it and subsidizing for it, are they going to subsidize the iWatch? No, there's no Wi-Fi in it. So maybe they make some money on the backside on selling apps for the thing, but it's hard for me to see why. It may be a wonderful deal. It may be one of those things that there's just no resupplying the kind of margins you make on that. It's not like Intel that just gets used to 60% and 70% margin on their chips. This is a very specific device, and I think Apple next year, probably 6 months, I'm going to record this today, is just saying, okay, yes, the top end of the market's saturated. We've already seen that with Samsung, and I suspect we're going to see that with Apple. But I'm looking at this thing with binoculars or a telescope. I'm not sure which one, but it's a little bit far down the road. I wouldn't be shorting them just yet. So anyway, But yeah, everything I see in Apple so far is a false breakout to the upside, and I can see that would come back down. So I'm kind of like the false breaks from Netflix to the upside when everybody just went insane. What else do we have here? I got 4 minutes in this segment. Let's go back and look at a few of these stocks I wanted to look at from yesterday. Wanted to see. the day before, actually. Wanted to see how some of these stocks are reacting. We talked about Kraft, and I wanted to see whether this thing had it turned down. In fact, it has. These are the ones we were talking about looking at yesterday and keeping an eye on. The big high was the July 8th high on Kraft, KRFT, $60.58, 5.7 million shares. Got into it 2 days ago with 3.5 million shares yesterday with 2.5 million shares, and we're down today on 1.4. So I'm just, the energy on this last leg up, a little weak, not hugely weak, not knees chattering kind of weak, and two, I just think this thing's probably going to expire a week from today at $60. I don't think there's a whole lot else we can take a look at. Okay, we're at 2029 on the S&P cash, 2.68 billion shares. So volume is not really picking up here yet today. And what can I say? Off 30 points on the S&P cash. And I'm just keeping an eye on the positions I have. Not bad. As long as I can stay up 4% on a down day, I'm going to be happy on that one. And if I can stay flat on the other one, I'll be happy. Oh, what did my other one do? Oh, it did do. It did do well. Oh, and I got short yet another one that I've been waiting to short for a long time. I think I got a gift today. So I'm going to be happy. It's Happy David today. Okay, Marvel. Wanted to look at this one. I told you this one a couple of days ago that did everything that you would expect it to do, and now it's starting to pull back. That is Marvel, MRVL. You had the huge gap down on huge volume, 16.1 million shares going back to June 5th. Yeah, June 5th. And, of course, we got into it with 15 million shares. Is that right? Yeah. So it was, a little bit, but it basically came up, hit the gap, like a lot of these things, and now pulling back. Probably headed back to this gap at about 13.5 on Marvel. A lot of people coming out and raining on the Stratasys parade. I still kind of like this stock down here, at least with the first possible buying signal on some of these 3D stocks. I took a swing at a technical level in DDD and decided to, I think I lost $1 on it. And this one's probably a little bit stronger. Certainly the chart looks a little better. Energy on the way down is about the same as the way up from these major lows. The May 9th low at $85.30 went up to $128 on July 1st, and the energy from about November 3rd, that 125 high, back down to the low back here, about the same. So it's not like this thing really put on a huge amount, but what I really like is the 1.3 million shares yesterday for volume, today 1.4 million shares. Does that mean it's going to absolutely start rocking higher? The answer is probably no, but if I'm wrong on the market rolling over at the first of the year, it's interesting. Another one that tells me we're probably pretty close to some kind of lows out here is U.S. Steel. This thing did gap up on heavy volume on the 30th of July. 29 million shares came back in. First time bounced on 10 million shares. Last couple of days here, 7.8 million shares, 7.5, 5.2 today. Looks interesting. We'll be back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And just a few things I wanted to talk about before the next show starts. Tom O'Brien directly after me on most of TFNN.com. At least live, anyway. So we got 2 hours with him, and we'll see how this market closes out. One of the more interesting things happening out here today was an insider trading case where two gentlemen, Newman and Steinberg, were convicted. And I think these two gentlemen are extremely lucky in that they had a judge who used to teach insider trading law. Basically, especially in New York, you can probably get a jury to convict just about anybody that's in finance. Now, the issue isn't whether or not someone told them to buy a stock, because they didn't. Basically, what happened was someone said something about a company moving, and someone said something to somebody else, and someone said, literally, it was 4 levels down. One person told one person told another person, one person told another person, and there was no... Somebody from the company said something. Basically, they heard a rumor. They acted on the rumor paid out, and guess what? You had a bunch of prosecutors come after these guys. Well, it has nothing to do with the law, and both of these guys got their convictions overturned. Of course, they'll still be staying by it. You know, if someone told me something, or if I heard something from me on the radio, would you be guilty of insider trading if I said something about how I thought about Apple or some news? And the whole idea is that somehow rumors are not out there and people don't act on them. But, you know, if you're trying to make your bones as a New York prosecutor and become the next governor, you want to throw a few people under the bus. And in this case, pretty huge case of prosecutorial, misconduct, where they took a law and got a bunch of people to convict somebody, and good for them. Unfortunately, they probably spent a huge amount of money on lawyers and a huge amount of money on an appeal for a case that should never have been brought. But those guys are at least going to be free here probably fairly soon, and probably have a case to sue the government, in which case we're going to pay for these jackasses trying to exceed the limit of the law. Of course, I know a lot of people don't pay any attention to the law anymore, going all the way up in our government, but I think they should. Isn't that what keeps us, isn't that the difference between us and the animals? I think so. Anyway, back to some stocks. Wanted to look at a few other of these. Altera was another one up here. I wanted to see how this thing worked. And most of these are pretty much acting correctly, i.e. that when they hit higher highs on lighter volume, they are rotating back into the trading range. September 19th, $37.63, 9.2 million shares, up with 3.2 million shares. $38.25 was that high just 2 days ago. Of course, it pulled right back in that day on that light volume and is back in the trading range. Again, I'm not looking for these things to really severely pull back anytime soon, at least this year, maybe the first part of next year. They've been kind of pushed up to their highs. But I think that we're looking at a lot of these stocks that probably are in the last innings of running up higher. I'm thinking that a lot of these are going to be good targets coming out the end of the year. DuPont, another one that we've pointed out over the last couple of days. Like I said, most of these stocks hitting highs with lighter volume are acting correctly. Especially DuPont. This thing came up with a very light volume from this last major low off October 29th. So probably a pretty good bet on that thing, that it's coming back into the trading range. Well, we'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to, and hang on for Tom O'Brien. 2 hours of Tom O'Brien.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.